Hi there, welcome to Markets Tomorrow right here on 89 November Central Weekend. And it was a fairly interesting session for the markets. We closed at 75.50, which was encouraging. It seems like the market has settled into a zone of between 7,400 to 7,600. And that seems to be the near-term range for the market. But the real pain came in from the bank index, which cracked almost about 1.5% in trade. There was a lot of stock-specific activity, which was pretty much the highlight of the session today. In fact, let's showcase the top headlines in the session today, and it really started off with the index closing at sub 7,600 and at 75.50. The bank nifty cracked almost 1.5% in the session, so pain was really in the large indexed banks. You name it, and except for Yes Bank, most of the large weighted index banks were under pressure. Maruti also cracked on disappointing Jan sales, so a cut of about 3% coming in there. Just Dial, this stock has seen a lot of pain, 30% down in 2016. It just seems like, the market for this one is eroding, and those concerns are playing on the stock's performance, trading back at its listing price after seeing that big up move since its IPO. And of course, then, in terms of individual movers, you had Eros International gaining nearly 20% in trade. That was a key gainer in the session. And then Tech Mahindra, their Q3 numbers were in line with estimates. Margins came also at nearly 17% and expansion seen quarter on quarter. So those were the headline makers in the session. The question that we're really asking is 7,400 to 7,600 really the new range for the market? Has it adjusted a bit higher? And can it, resume its uptrend or perhaps make a dash back at 8,000? Is the near-term selling pressure over really for the market? And we'll discuss that with our big voices lined up on the show, whether it's Ratnesh Kumar, Nishchal Maheshwari of Edelweiss, Mayuresh Joshi of Angel Broking, who'll be talking about the individual movers in the session today and his investment ideas, or Manav Chopra on the technicals to take us through his technical trades for tomorrow's session. Also, we'll have Nureel Rubini talk about his perspective on the global economy and how India stands out in the turbulent times that we're witnessing right now at the start of the year. In fact, let's start off with Rubini itself. Despite the global trade slump, Rubini believes that India has managed its fiscal situation a lot better. The currency as well has largely stayed stable in an environment where EM currencies have been in a free fall zone. So he's given pretty much a thumbs up to the Modi Sarkar and believes that India is pretty much on track to keeping its growth returns in check. Hear out as he spoke earlier on exclusively with Niti Aayog Vice Chairman Mr. Arvind Panagaria.
He's a visionary. He presented a very broad agenda for what he wants to do and what he has already done, both accomplishment and what needs to be done. So I think that having a leader that knows how to change this country and this economy in the right direction is important. And I think that that strong leadership is there. I think that everybody recognizes that there is a list of reforms that have been made, another list of reforms that are in the pipeline but have not yet implemented. There are, of course, legislator constraints of one sort or another, because some things have to be passed by, say, the upper house, where there is not maybe yet a majority, like the GST reform. There are other things that have to be done through regulation and so on. And, of course, in a large country like India, change takes time. There is vested interests that are maybe against change. There are, political economy of reform that is hard. Trade openness is increasing significantly. I think that on the side of capital account liberalization, India has been more cautious for a number of reasons, including bond inflows. I would say that, interestingly enough, I was recently again in China, and one of the reasons the Chinese wanted to maintain their growth rate closer to 7% rather than lower, I was asking why it's so important for you, apart from prestige, was the argument they made. They said in the last 30 years, growth in China has been faster than India, and we have been receiving so much more inward FDI in China relative to India. Their concern is that if Chinese growth as it is slowing down towards 6% or 5%, while the one of India is already 7% and growing, then the investor attention is going to go towards India rather than China.
All right, that was Professor Nureel Rubini talking about his India view, and he's upbeat on India's economic model. Let's touch base with Mayuresh Joshi and Manav Chopra to get their sense of the market session today and what the outlook seems like going forward. Mayuresh, start off with you. I was just looking at the data for markets historically in Jan and Feb, and that'll come up for our viewers in a bit. This has been the second worst performance in the month of Jan, actually third only after 2008 and 2010 in the last 8 years, which essentially means that the start of the year has been rough. Do you think that range between 7,400, 7,600 is now pretty much giving comfort to the market, or, it's still looking very tentative?
Evening, Tanveer. I think clearly the range would continue, and the softness in the markets, in my opinion, would continue going forward, because you're looking at a whole host of uncertainties being played out over the next few weeks, whether that be the Chinese data points, oil that we're all talking about over the last so many weeks now, and even on the domestic side, I think earnings, where you're seeing downgrades still happening in terms of expectations, probably reviving a little bit later than sooner. So clearly, I think you're probably looking at corporate earnings not reviving so soon, the capex cycle not catching up, and that's probably going to put pressure in terms of how earnings are expected to pan out for the greater part of 16. So I think that's gestated by the market, but clearly, I think the only trigger that the markets are now looking at is the budget. So till that point of time, I think we might stay in the range that you're probably talking about. But clearly, I think the budget will be a make or break for the markets, at least from a short-term perspective.
Manav, what's your own sense technically?
See, for the near-term perspective, I think the kind of a breakout we saw on Friday's session as the markets managed to decisively break above the 7,500 levels, I think the immediate support stands at 7,500 and 7,520 in the near-term perspective. And we've seen historically that after such a big range breakout, we don't really see a follow-on move. I think as long as market trades above and sustains above the 7,500 levels, I think there is all possibility that we would be moving ahead in the near-term perspective. The oscillators have also bounced from its oversold zone after the sell-off that we've seen in past few weeks. I think in the near term we could see a rally close to the levels of 76, 70 or even close to the 7,700 levels. It's going to be a very stock-specific approach that is likely to be seen in the markets going forward.
Okay, fair enough. Mary, let's talk about the auto sales numbers. Surprised with Maruti?
Well, yes, Tanveer, I think, and in fact disappointed with the way the export numbers probably panned out. And what you're talking in terms of the product mix, even on the domestic front, you're probably seeing some weak change happening on that part as well. So even if you go by the numbers that they posted, they already had a few inventory issues, and you're probably looking at EBITDA margins getting compressed because of the higher advertising and promotional expenses. To top that up, I think if the yen appreciation continues, in my opinion, again, the EBITDA margin compression would be very, very evident in Q4. So clearly, I think disappointing numbers probably that have come through in Jan, and one really needs to wait and watch to understand probably how valuations will stack up. Clearly, I think valuations are a little bit attractive from the price that we've probably seen 2-3 months back. It is far better in terms of how earnings are expected to pan out in terms of price earnings multiples. But clearly, I think I'll be adopting a wait and watch mode. The auto numbers, in my opinion, I think M&M has posted a reasonable set of numbers. Tractor sales always expected to be subdued, and specifically on the farm equipment side, the numbers were indicating for a volume degrowth. But clearly, I think the UV sales are much better than one really expects for M&M, and again, valuations looking a little bit more attractive at this point of time. So stacking up, I think M&M looks better from a medium-term perspective compared to Maruti, at least in terms of how the valuations are stacking up.
In fact, Ajay joins in with a quick snapshot of what to expect from the entire auto basket. These numbers would be signaling, how the demand environment for the manufacturing side is shaping up. Maruti, which has been performing consistently well month on month over the last 8 months or so. In fact, for the better part of 2015, the passenger vehicle major did really well in terms of their overall volumes. It'd be interesting to see whether they can sustain that. And even for the rest of the sector, whether it's a CV cycle, or whether it's a two-wheeler manufacturers, one needs to understand whether, the core of the economy in the manufacturing side, with especially the auto sector being at the center of the demand cycle recovery, whether that's showing signs of coming back. Ajay?
Well, the auto sales data for the month of January is actually showing up a pretty mixed picture. So far, the numbers which have come out, the commercial vehicle end of the business seem to be doing well. That's why Ashok Leyland has come out with a much stronger number than the 22.5% which we were actually expecting. Similarly, Eicher Royal Enfield numbers continue to remain very strong. That number was also much ahead of what the street was estimating. What actually disappointing the street today as far as January sales go, or I would say the sharp disappointment, came in from Maruti. We were expecting almost 1.3 lakh vehicles. It has gone down a shade closer to the 1 lakh vehicle mark, and the stock of course got punished badly in trade today. By the fag end of the session, we saw M&M also come out with their numbers. Both M&M as well as M&M tractors have come in slightly ahead of what the street was estimating, and probably the reaction would be seen in tomorrow's session because the numbers came in just at the fag end. The two important numbers to watch out for, which will be released later, are Hero Honda and Bajaj Auto. Bajaj Auto, we are expecting almost 3 lakh number coming in for the sales of Jan, which is almost a 3% growth. Whereas for Hero Honda, we are expecting almost a negative number coming in of 4.5%, anywhere between 5.3 to 5.4 lakh vehicles. That is something to watch out for. Again, Tata Motors and TVS will also come pretty late, but we are expecting a 14% improvement as far as January sales go for TVS Motors, and as far as Tata Motors go, a flattish number of almost 42,000.
Thanks, Ajay, for that. Tech Mahindra came out with numbers post-market close, flat in line. Mana, from the technology pack, which are the charts which are holding on? What's your top trade?
See, for the near-term perspective from this sector, I think HCL Tech really stands out. Actually, the stock has given a breakout from a short-term consolidation phase of last 2-3 weeks, and the stock after a long time has also managed to close above its 100-day moving average. I think the volumes also are confirming a bullish momentum, and for the near-term perspective, one can expect a target of close to 910 to 930 in possible next few weeks. The other stock which stands out is definitely Wipro at the current levels. The prices have also breached its falling trend line drawn from its recent highs, and I think going forward we could expect high targets of close to 580 on the lower side. 555 and 560 is an important support, and in case if that holds, we can expect the current momentum to continue.
Okay, gentlemen, stay on with us. We'll head into a break right now. Nishal Maheshwari of Edelweiss Securities highlights his investment ideas. Take that break, come back as we talk about how to approach tomorrow's session.
I don't expect any cuts happening at in the tomorrow's policy. Basically, I think governor is indicating that there are too many volatile events which are happening across the world, and he would be cautious about that. I do not see that there has been some outstanding results. There has been profitability increases largely because of the raw material costs going down. But what we have been a bit disappointing is top line growth, where we are seeing that the demand is still not taken off as one would have expected. So I think it's sort of a mixed bag till now, basically, as far as Q3 is concerned. So we have been quite positive on Yes Bank for a long time, basically, and we continue to believe. Look at the quality of book which they have actually come out, and I think unlike most other banks, they have actually cut down their guidance for credit cost this quarter. So I think it's a good bet at these prices also.
Welcome back. You're still watching Markets Tomorrow right here on ED. Now, a quick roundup of some of the mid-cap companies that came out with their numbers. Pranay joins us with the list and analysis. Pranay.
Well, when it comes to the mid-cap earnings, the biggest realty company, DLF, will be reporting its numbers. But from the core operational side, we are not expecting much. 3% growth on the top line because no new projects will be hitting revenue recognition. It's just the old projects which will be contributing, where Camelus is said to be the key contributor to the pre-sales. Margins could come down by about 220 basis points to 38.4%, and profit growth is expected to be 16%. But the actual number could be higher because of the stake sale in 2 projects to GIC, which amounted to nearly 2,000 crore rupees. So we don't know how much of that would be recognized. What would be important to watch would be the debt reduction roadmap as well as the outlook on the pre-sales, because we don't know much about the new launch pipeline, and also what is the progress on the asset monetization. For Amara Raja, we are expecting a good set of numbers across the board. 10% growth on the top line, 13% on EBITDA, 18% on the bottom line. This will be driven by the traction in the four-wheeler segment particularly, and the market share gains that the company continues to enjoy versus Exide. However, it's the lower lead prices and the control on costs, which will drive the margin expansion both QOQ as well as year on year. For Tata Communications, we are expecting revenue to be flattish, could see a marginal decline because voice revenues are under pressure. It's just data revenue which is growing by about 3 to 4% sequentially. Also, when it comes to margins, data could improve by 80 basis points, but voice could actually dip by about 130 basis points. So important to watch over here is the management outlook on data growth and margins, as well as what is the update on the Neotel transaction.
Fair enough. Thanks, Pranay, for that. While we have been discussing the micro side of the market, the macros are also in a way going to determine where the market goes from here in its next leap. The two aspects to that is one is the credit policy review that comes up tomorrow ahead of the budget. And then the next cue, of course, lies in the budget and how it unfolds to unleash India's potential. But, that's a quick roundup in terms of expectations. Largely, the market believes and economists believe that, it'll be status quo on rates this time around as well. A further rate cut decision would not be taken. But Nisha Poddar joins in with a quick snapshot of how one should be looking at the credit policy review this time around and what one should expect. Nisha.
It's a near united house when it comes to expectation from the RBI policy on 2nd February. Most economists are of the view that there will be a status quo which will be maintained by Dr. Raghuram Rajan, and only after Arun Jaitley's union budget just round the corner, there will be more monetary policy stance which would be taken by the RBI. Some are of the view that there could be an outside chance of an outside of policy repo rate cut right after the budget of 25 basis points, and some are of the view that it could be only in the April policy. But most economists do feel that 25 basis points rate cut by the RBI after the union budget is pretty much a done thing. So that's the expectation building up. As far as accommodative stance is supposed to be continuing for the RBI, and the tone should be dovish to neutral is what most economists have to say. As far as the GDP growth and the growth target estimate is concerned, that's expected to be unchanged, and on the inflation front, there could be a slight downward revision or unchanged. So those are the important bits that we could expect. But other factors to watch out for, remember, there's extreme volatility in the financial markets across the world, and its impact on the monetary policy will be keenly watched out for. Also remember, the central bankers' actions across the globe, especially in the US, China, and now also Japan, are something that RBI could be commenting on. And on the radar from the domestic front would be the budget as well as monsoon, which have been deficient for 2 years, and its impact also on food inflation, which the RBI is monitoring closely. So these are important, but from the bank's perspective, remember, the entire cleanup drive and more clarity is required on that, because a lot of those efforts taken by the RBI is hitting the bottom line of the banks as well. Apart from that, for boosting liquidity, RBI has been doing open market operations, and that is also expected to continue going forward.
In fact, since that's going to be the big theme tomorrow, let's get in Ratnesh Kumar to give his quick perspective on how the markets are stepping into the all-important credit policy review event.
Tomorrow is unlikely to be any cut, but I think for the year as a whole, I would still expect RBI to cut rates by 50 to 75 basis points. I would not rule out 8,500 to 9,000 later this year. But it is that that's an expectation which is not going to be fructified in a hurry. So if anything, that is a second half kind of a situation rather than first half. Now we're looking at FY17 and 18. If you're looking at consensus growth, those are around 17-18% again. And the areas which are driving that growth recovery are, as usual, financials have to be part of it. Financials, the private sector, especially the ones focused on the retail segment, they will continue to give decent earnings growth. You will have IT services which on a relative basis perform okay, as well as smaller sectors like media. They still have growth. Healthcare, they still have growth, as well as some of the other areas like consumers. Some of the consumers will be able to deliver that kind of a growth.
All right, that's a quick market response to what to expect from the RBI tomorrow. Mayuresh, your investment ideas, there's going to be a big event, so there's going to be a lot of focus there in terms of policy action on the monetary side. Maybe you would want to take a call on, how to invest in banks and financing companies in lieu of that.
No, clearly, Tanveer, I think the investment strategy is very, very clear. I think if you want looking at banks or the financial space, specifically the housing finance companies, one needs to take a very slow and gradual approach towards these companies. So in terms of fresh investments, I think a 10-15% allocation should come through towards the larger private sector banks. Yes, I think retail-oriented is something as a theme which should probably work out very well over the next few quarters. But then I think a mix of all these banks, including Axis, ICICI, because in our opinion, probably over the next 2 quarters, the asset quality pressure should more or less peak off. So again, I think a clutch of these larger private sector banks and within the housing finance companies, in my opinion, LIC Housing Finance posted a stellar set of numbers. So a gradual way of investing in these stocks over a period of time, I think is the best way to approach financials as a space at the current juncture.
Okay, fair enough. The Bank Nifty cracked 1.5% in the session today. Manav, how would you approach trade tomorrow on the index, on the Bank Nifty and some of the individual banking stocks? Any trades out there? What are your top 3 strategies?
See, for the near-term perspective, I think Bank Nifty faces stiff resistance around the levels of 15,500. So until this, the index breaks above that, we will not see any sort of a momentum into it. But nevertheless, I think the selling pressure is likely to continue, and we will expect this sell-off to continue at least in the PSU bank space. Stocks like Canara Bank and Bank of Baroda would witness selling pressure, and we are expecting at least another 4 to 5% decline in the near-term perspective. The main reason is that what we've seen, that the stock has been forming series of lower tops and bottoms, and is witnessing selling pressure with rise in volumes as the prices are going down. So for the near term, I think the immediate target in Bank Nifty, we're looking close to the sub 15,000 levels on the lower side.
Okay, your strategies for tomorrow then, specific?
Yes, I have 2 buy calls for tomorrow. First would be a buy on Petronet. Basically, the stock has been in a very good uptrend, and recently the stock has formed a minor higher bottom at the current levels, and the prices have also managed to close above its short-term daily moving average. At the current levels, the stock has an important support close to the levels of 255 on the lower side, and since the prices have closed above its yesterday's high, we expect this trend to continue. We recommend a buy with the upside target of close to 270. My second buy call is on Cipla. The stock, after a series of decline, has seen a very good bounce back from its oversold zone, and the prices have also breached its falling trend line drawn from its recent highs. At the current levels, there's important support around the levels of 592. We recommend a buy with the stop loss of 590, and we expect an upside target of 640.
All right. Thanks very much, Manav, as well as Mayuresh, for joining us and putting things in perspective on how to approach tomorrow's session. It will be all about the credit policy review and what the RBI says and does in terms of communicating their monetary policy stance for the near term. And of course, then it'll be countdown to the budget. So the market perhaps might be biding its time in a range. We'll have to see what the market does in the near term on account of that. Wrap up the show, but catch you with the market as always tomorrow morning at 8 a.m. It's going to be an important day of trade. You can't afford to miss it. So keep it with ET now.